Hello and welcome to Lipper's Fund Flows Insight Report. I'm Jeff Turnahoy. For the week ended August 22, 2012, equity fund investors remain unconvinced of the veracity of equity fund markets despite seeing the S&P 500 index touch a 4-year high. Let's take a look at our macro groups and see where this week's activity was. Starting off with those same equity fund investors, we saw outflows of about $1.5 billion from their accounts. Taxable bond fund investors injected a net $3.2 billion into theirs. Municipal debt fund investors also added about $450 million to their accounts, and money market funds saw about $1.9 billion added to their coffers. As I said before, equity fund investors really aren't convinced of the direction of equity markets right now, despite seeing a good intraday peak in the S&P 500 that was near a 4-year high. We still saw outflows this week. But the direction of some of these categories is interesting. For instance, this week we saw large cap growth and small cap growth take in money, while large cap value and small cap value saw outflows. In fact, over the last four of the past 5 weeks have been outflows for equity markets in general, so investors are very choosy about which categories they're selecting. They had little performance this week between the domestic and the non-domestic, so it's not even a matter of that being a difference in their attitudes. Overall, equity is just kind of a soft spot right now in investors' hearts. The next group we'll look at is ETFs. Here, equity ETFs saw inflows of about $3.5 billion. This follows about 2 weeks of outflows previously. The Spider Gold was this week's big winner with about $1.3 billion in net new money, while we also saw consumer-related ETFs with outflows this week. So maybe, again, probably riding on that same soft consumer sentiment thesis that investors have. Next group we'll take a look at is taxable bond funds. Again, about $3.2 billion in flows this week. It's a bit of a rebound from the previous week. So their 4-week moving average is moving higher, so there's still some momentum in taxable bond fund flows. Products from DoubleLine, MetWest, and JP Morgan mortgage funds all saw decent flows this week and led the top of the inflow charts. But let's not forget about ETF fixed income funds. Here we saw about $600 million in net inflows. A couple of highlights this week included corporates taking in money while treasuries saw outflows. So between the two of them, it looks like taxable bond fund investors look to corporates for providing leadership in the weeks ahead, and they're turning their backs on treasury funds, which had been doing decently and as far as performance goes until summer kind of firmed up in Europe. The next group to take a look at is municipal debt funds. Again, about $450 million in net new money this week. It's a little bit lighter from previous weeks. We saw high yield funds take in about $180 million, while intermediate muni debt funds took in about $103 million. So perhaps that leadership of the intermediate muni market indicates that investors might be getting a little bit of a sticker shock on some of that long-term muni debt. The next and final group to take a look at is money market funds. Again, about $1.9 billion, a fairly slow week for them. The only difference that we really picked out this week was between agency and non-agency, so government-related money market funds and non-government related. In this case, the agency debt had outflows of about $12.4 billion, while non-agency debt took in about 14.3, that being the only real difference we could tease out. Well, that will wrap it up for this week's analysis of flows in the mutual funds and ETF industries. Join us again next week where we'll take another look at those same flows figures, or join us online at lipperusfundflows.com. Thank you.